Uber reported earnings before the market opened on Wednesday. The market didn't like what it saw. Shares were down almost 8% in trading on Wednesday. But I think the company's results and the vision for the future actually makes a lot of sense. So I'm going to go through these results and how I'm looking at Uber, why this is a stock that I have recently started buying in the asymmetric portfolio. So dig through all that today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with a high level look at the results. Gross bookings up 18% year over year. Look, any company that is growing nearly 20% year over year is going to be doing really well long term. Up 21% on a constant currency basis. Income from operations, $770 million. Free cash flow, $1.7 billion. This is no longer a company that's burning through cash. They're generating a ton of cash, and now we're going to be buying back shares as well. These are the highlights just for the fourth quarter. Here's that 18% growth in bookings to $44.2 billion. Just a reminder, bookings is not revenue. Uber books revenue as the portion of each sale or each ride that they actually keep. The part that goes to the driver, not generated as revenue, is not noted as revenue, but is noted as bookings. Mobility gross bookings, $22.8 billion. That was up 18%. Also up 18% is their delivery gross bookings. So interesting that is basically now a 50-50 business. Net income, $6.9 billion, which sounds huge because it is. It includes a $6.4 billion tax valuation release and a $556 million benefit due to unrealized gains related to Uber's equity investments. Cash provided by operating activities, $1.8 billion. So just annualize that, you get $7.2 billion on an annualized basis. I know that's not exactly how the business works, but these numbers are starting to get pretty crazy. For the first quarter of this year, they expect bookings to grow again near 20%, 17 to 21%, and adjusted EBITDA of $1.79 to $1.89 billion. All of the metrics that you want to see growing for Uber, moving in the right direction. Monthly active users, the number of trips, gross bookings. I don't want to highlight too much on these results because I think everything's moving in the right direction. And if you're a shareholder like I am, you want to see this company growing in double digits. That's exactly what it's doing. But what's the vision for the future? That's where I think the presentation that the company gave to investors was really interesting. This is their Q4 supplemental data. So this typically tells you where the priorities are for the company. Yes, they're going to go through financial operations and highlights a lot of the numbers I just went through. But the first thing they start with is autonomous vehicles. This is the reason that I own shares of Uber, because I think this could be a PowerPoint in autonomous vehicles. I think it's becoming clear that autonomous vehicles themselves are becoming commoditized. It's not just going to be one company that can make a fully autonomous vehicle. There's going to be dozens of companies. They will talk a little bit about that, but they say $1 trillion opportunity. The total addressable market goes up. And then also this price per mile. This is something that we've been talking about for a long time with autonomy. Can you get under $1 per mile? Right now, an Uber or any sort of ride sharing service is going to be a little over $2 per mile. That maybe makes it a little bit less compelling if you're going, let's say 10 miles, and that's going to be a $20 to $30 ride. But now if you're going 10 miles in the future and it's an $8 ride, maybe it's compelling to even get rid of that vehicle or just ride in your own vehicle even less. Partnerships are starting to roll out. These are commercial level 4 partnerships: Waymo, WeRide, Pony AI, and Baidu. Some of these are in other countries, not operating in the US. Waymo recently launched with this partnership in Atlanta, but a ton of optionality for growing these in the future. A couple that I just want to note: Aurora May Mobility is a company that has partnered with other companies and they actually are testing some of their vehicles. And then Mobileye is the company that's behind most of the ADAS systems in the world today. They sell tens of millions of those on an annualized basis. They're signing more and more deals and testing their autonomous fleet. So that could be rolling out to millions of vehicles that could potentially just tap into Uber. So that could be a potentially interesting partnership as well. Zoox is another company to watch that's owned by Amazon. But as autonomous vehicles become more of a reality, Uber's trying to figure out where does it fit in this landscape, enabling regulations, scaling on the ground operations, cost-effective hardware platforms. They're basically, part of this is just a sales pitch to these companies that are making an autonomous driving platform or service, the hardware themselves, saying, how do you get to scale? How do you get riders into your vehicles? Hey, work with Uber. I think that's a big piece of what's going on here. And autonomous driving really could change this dynamic here where most trips are happening during the day, during kind of peak hours. I think you could ultimately fill in some of these gaps if you have an autonomous vehicle, do deliveries at night, things like that. So you could have much more utilization for each vehicle in that world as well. And then here's where they're just laying out the big vision. Autonomy is going to unlock meaningful total addressable market when costs drop below human driven rides. That is probably already close to the case today. There's not much scale with autonomy. So you can charge the same that you have for typical vehicles. Now the question is going to be, how does Uber transition from having millions of drivers to having autonomous vehicles? They may have a little bit more difficult transition than some other companies might. But I thought it was interesting that they highlighted this and spent so much time discussing what the vision for it is for autonomy, because this ultimately could be what expands the company's addressable market by 10x or more. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So strategically, I think Uber's heading in the right direction. The market seems to be quibbling over, one number here or there, depending on the company that's reporting right now. Obviously, Uber took a hit, about 8% in trading on Wednesday. But I think if the stock gets any cheaper, that's where you really find a buying opportunity. Price earnings multiple on a trailing basis, right around 30. So that's a pretty good valuation for a company that's growing in the mid-teens to 20%. That kind of growth rate compounded over just a few years could make that be a very, very cheap stock. At the same time, increasing the total addressable market with autonomy is ultimately where the big potential is for Uber and for the industry overall. I could see this being a real point of value if consumers continue to choose Uber as the app that they want to interact with when they're calling a ride, when they're ordering food, all kinds of different things that they could do. They can move that into business to business applications. And like I said, if autonomy itself becomes much more of a commodity, you basically have commodity suppliers providing their autonomous vehicles to you as a fleet. That maybe makes your differentiation versus another ride-sharing service that has its own autonomous fleet, or the same vehicle could plug into both fleets at the same time. Maybe that differentiation isn't quite the same, but the expansion in the total addressable market is going to be much more important. So I like where Uber is at. I like that strategic position, and they're improving their cash flow. They're showing that they have operating leverage in the business, now buying back shares at a relatively modest rate, but they have a $7 billion share repurchase program, accelerated about $1.5 billion of that. That's only going to take about 1% of shares off the market, but you continue to do that year after year, given the increasing level of cash flow. That's how you end up incrementally adding value, especially if you're able to grow the addressable market over that period of time. So long term, I think Uber's sitting in a really good position. Interesting that they are now focusing on autonomy, because I think that's going to become a much bigger point of conversation, not just from Tesla, but from everyone else in the industry as well. So keep an eye on that. Let me know what you think about Uber's results. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.